Hello, everyone. Good afternoon. Welcome to the final bar. Today, it's all about the S&P sort of clumping around, sort of managing around the 3350 to their 3400 level. Sort of chopping around, finishing in the positive. But today, on a Monday, it's all about the big picture and hitting the market from the top down, the bottom up, and sectors in the middle. We're going to talk about potential leadership rotation, how that continues evolves with things like industrials coming on pretty strong here recently. Ladies and gentlemen, this is the final bar. Hello, everyone. Good afternoon. Happy Monday, and welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny and beautiful Redmond, Washington. Thanks for joining us every weekday after the close to look at these markets together through the lenses of technical analysis, behavioral analysis, quantitative analysis, sentiment, psychology, breadth, all the different tools we can use to try to get inside the head of all the other investors out there. And most importantly, connect what we saw today with the longer term trends and how those are evolving. As we've talked about in the last couple of weeks, we're really in this transition phase of sorts, right? The S&P nearing all-time highs. Many stocks, as we'll get to later, already breaking above their early 2020 highs and continuing on to the upside, some pulling back, but overall the broad market is framing out what could either be the next level before a break above 3,400 and breaks to much higher levels, or this ends up being one of the most clearly defined double tops in market history. We're going to try to navigate this together and see as best as we can which is which. I did want to point out all the great content we have on this show, on the Final Bar, and elsewhere on StockCharts TV this week. Earlier today, we premiered our latest episode of Behind the Charts. That's where we interview some of the top traders, strategists, technical analysts in the industry. I sat down at a money show not too long ago with Josh Bellinger. Josh does such a good job thinking about how to relate to the options market from his experiences, really starting on the floor of the exchanges in Chicago, and how he now is able to empower other investors to navigate the options market effectively. On this show tomorrow, we have Larry Tentarelli from the Blue Chip Daily Report joining us. On Wednesday, Jane Galena from cjanetrade.com. And on Thursday, Ari Wald, our friend from Oppenheimer. Also on Thursday, that's August 13th, we have our next episode of The Pitch. I will be moderating a really fun 1-hour discussion with Dave Landry, Grayson Rose, Tom Bowley. So 3 names and faces familiar to many of you, but the idea with The Pitch, they each come with 5 ideas. They get a chance to share them all, and then we discuss them as a group. We've done this a number of times before, and it's just been a lot of fun. It's great to compare notes with other strategists and see what sort of similarities, differences come out on 3 independent looks for best ideas. So join us for The Pitch this coming Thursday. Continuing on with our market recap for today, as I mentioned, the S&P sort of plodding along, sold off sort of into the late morning hours, but then rallied back and finished up toward the highs of the day, just around 3360, just above that for the S&P 500. Mid caps and small caps up even more. So small caps continuing to outperform. That's a theme that emerged last week and appears to be continuing. The NASDAQ 100 both down. Tech was actually down on the day. We've talked about, is there this rotation? And again, rotations don't happen in one day. Rotations happen over a series of days, a series of weeks. That's when leadership kind of evolves. So interesting to see things like tech, healthcare, communication services, the bottom 3 sectors today. At the top, you have energy, industrials, consumer discretionary, then materials. So certainly today, as for what it's worth, the message was rotation continuing away from tech and into other places. Over time, that's how we see how those themes emerge. And when we get to the shifting stock segment, I think you'll find that there are patterns that are emerging to the upside in a lot of sectors that are outside of tech. That's sort of what stood out to me. Very quickly, yields higher today with the TLT bond ETF down about 0.5%. The dollar finishing higher, really continuing higher through much of the day, although not much. It wasn't a huge up day. Gold a little bit lower, but silver actually up more positive. If you remember, mid last week, precious metals got hit pretty hard. It was after dominating for the longest time. So a little bit of a right sizing of the trend, but silver back in the positive, up over 3% today. Let's look at a chart of the S&P 500 and just as we've talked about. I think all eyes on S&P 3400. This is a level we've talked about, and someone I think gently reminded me when I had Craig Johnson on the show months ago. We were debating the future, and Craig somehow talked me into doing an informal wager on whether we would see S&P new highs, or I forget what I picked, but it was something not new highs. I picked down. I think I had 2,500, and I think this is right around here when we're in this pattern. I'm thinking, yes, I think it's more likely we hit 2,500 than 3,400 or something like that. And yeah, I am very close to losing that bet in a big way. But overall, along the way here, I think there have been plenty of signals indicating the strength of this uptrend. It's not just the chart of the S&P that has continued to resolve any corrective patterns to the upside. That's happened a lot. It's also individual stocks, right? If you look at the number of names making new highs, and you look at charts like Charter, you look at the Gap breaking above, breaking the new swing highs, Verizon, even in financials, you have things like, I'm trying to think about, like Berkshire Hathaway, right, breaking above its 200-day moving average. There are names around there that are appreciating, that are showing their ability, demonstrating the ability of breaking above resistance and remaining above it. So I think we've seen the patterns on here. The question now is going to be what are the conditions as we reach this key resistance level? And again, I wouldn't think of it as anything other than a resistance level until proven otherwise. There's so much attention to this. I think if and when we do hit that 3,400 level, and we're right in the rounding error range, I would be amazed if we don't get a pullback. And we might break a little bit through it. That's totally fair, but I think fairly reasonable you'd see at least a digestion of this uptrend. This is as the S&P is nearing overbought conditions, so it's becoming overbought right at resistance. I think it's totally fair, and the question is, where do we pull back from here? So my base case at this point is we top out not far from here. I think on the upside, I think we pull back sort of in this blue range would be my sort of base case based on the strength that we've seen. And as long as we remain above 3,200, I think that uptrend is still very much in play. And you could think of this as the next pullback before the leg higher. If we break below 3,200 on a pullback here, then I would start to reevaluate and think about maybe some further pullbacks, which for me would be around this 2,970 to 3,000 area. That's the lower end of this coil pattern that we saw back here in June. So overall, I think what makes sense from a technical perspective is you make some sort of double top in this general area. You pull back, and that's going to satisfy everyone, because if you're bullish, you need that kind of pullback. If you're bearish, you feel validated that we get a leg down. I think that is the decision point. I think here we're sort of set that we're at the previous highs, and that's kind of what's happened already. We're going to get to other themes in terms of sectors and stocks. So I don't want to draw too much on those. I'd rather spend a little more time just on the high level analysis of the trends. If we could, from a breadth perspective, we talked about this a little bit on Friday, but just to revisit it, I think, as I was going through the charts on the weekend, I think it's, I reset up this chart just a little bit. So if you followed the show for a bit, you'll see this looks a little bit different, but I sort of moved this one up. This is the NYSE common stock only advanced decline line. That's the one that I followed here. And I think this is still neutral. This is where the regular advanced decline line actually incorporates things like bond ETFs, closed-end funds, and stuff like that. This is just common stocks. It's still not broken above the June high. If you look at the S&P 500, well above the June high, well above the February high. If you look at the mid-cap index after the strength through Friday, you're broken above the June high, above the January and February highs. Small caps have not done it yet. So one by one, these breadth measures have turned positive as they've broken to new swing highs, and that speaks to that as much as we talk about it as a narrow-led advance, it actually has been broader than you might expect when you look at some of these breadth measures. Also, this last chart I'll just show you, the fact that over 50% of the S&P above their 200-day moving average, almost 60%. We'll see as the close locks in today, probably a little bit higher, probably above 60% today. So 6 out of 10 names above their 200-day still, even with any sort of pullback. That's our market recap for today. And again, I think overall, I think it's long and strong, solid uptrend, fairly consistent. I think now we're nearing resistance. And I think as we get into the sector and stock discussion, think about these signs of potential leadership rotation, because as Ralph Akinpor told us in our interview with him for the mid-year special charting the second half, we talked about how you really need a leadership rotation right about now in the cycle if you'd expect to get much further up. So if you are bullish, I think you have to actually in some ways cheer for rotation away from technology into other places. Having said that, let's get to our next segment, sector setups, and let's focus a little bit on the sectors themselves and what's happened in the last week. So this is our weekly view using the RRG charts. A lot's happened actually in the last week, so I want to just spend a minute or two on this before we look at some of the individual sector themes. The idea here, of course, is that we rotate in a clockwise motion around the S&P right in the middle. If you missed my interview with Julius de Kempener, that was last Thursday, if I remember right. We had a great discussion, not as much about sectors, but more about some of the broad asset class rotation, stocks versus bonds in particular. But watch his show, Sector Spotlight. He does a great job highlighting, how to use this methodology. But if you'll notice, look at the number of sectors that are rotated from a northeasterly direction, which I sort of describe as the direction of improvement, to a southwesterly direction, which is the direction of not improvement, or the direction of destruction. Maybe we'll call it that. Energy has done so very slowly and painfully, but it's done it. Financials now have turned to that direction. Industrials not quite there, but certainly slowing down the momentum. Real estate has taken a big left turn going southwest. Consumer discretionary materials, all of those sectors have in the last week or two sort of rotated from going northeast, showing a pattern of improvement, to southwest, which is more of the direction of deterioration. And it's illustrating how that longer term relative trend, it's rotated away from those places. What has upticked a little bit, you have technology that's rotated back northeast. Communication services just in the last week sort of rotating northeast, although it's a little earlier on there. And then consumer staples, maybe the only other one, but that's still not really going dramatically in the right direction yet. So the average sector has gone from looking a little more attractive to a little weakening. And what that rotation, when it kind of goes south, that doesn't mean the overall trend has changed. That means the rate of change or the momentum has shifted and it's slowed down. That is kind of, in my mind, mentally, that's what tops look like. As you get that slowing down of things, you get the rotation, the slowing momentum as you reach the previous highs. The next move, if this is in fact a double top of sorts, as the little preview chart of the S&P seems to jump off the page for me, that's where you get further rotation. So it's worth watching this to see if you continue to get a rotation away from some of these groups that have been doing well on that longer term time frame. To rotate a little lower. We're not going to look at the daily relative rotation graph, but I'd encourage you to do that as well, thinking about more of the tactical moves in some of those sectors. Healthcare is down here, and we're going to talk about biotechs a little later. Some of the better charts that we've seen, and all starting to rotate lower a little bit, and some of them a little bit like a Regeneron that's pulled back a bit. Some of them really breaking some key support levels, like Gilead maybe comes to mind. We'll get to some of the individual charts in a little bit, but some rotations there I think are worth paying attention to, keeping an eye on, especially if they're part of your thinking, part of your portfolio at the moment. To finish up this discussion of sectors, I just want to look at the top down, the candle glance. We can sort of identify all these together. Focus very quickly on the sectors that are at or near long-term highs, have broken above resistance, and appear to be in pretty good shape. Communication services, consumer discretionary, technology, consumer staples, even although they're really testing that previous high, to be totally honest with you. So some of those are in pretty good shape. Some of them struggling a bit, and healthcare is probably the most obvious of that. Look at the run that we had, finally broke above resistance. And then in the last couple weeks, last 3 or 4 weeks, it's really been a consolidation. It's really been a holding pattern of sorts. And a lot of the FANG names kind of look like this too. This is why tech and communication services, some of these have struggled a little bit, because this is what the charts look like. They broke out, and now they're just kind of in a holding pattern, sort of sideways. And seeing which way this sort of thing resolves, I think could be really helpful. Healthcare, the XOV either breaks above 107 or it breaks down through 104. And I would argue that whichever way that goes, I probably assume a continuation of that. It's interesting to see the XLV threatening a new 6-month relative low when you look at the relative strength chart there at the bottom. But 2 sectors I want to highlight, maybe 3, very, very quickly. Then I want to get on to our last our commercial here. Number one, industrials, which have come on strong. And if you look, they just today broke above their June highs. That's after a big acceleration into the weekend and now continuing that further today. This is a sector that I think many people have sort of written off. This is where you have some really painful charts like airlines, defense, aerospace, and many others. But all of a sudden started to really show some short-term strength, so worth paying attention to. Materials has pulled back a little bit in the last week or two, now rotated back and testing a new closing high for the year, which is pretty compelling as well. And then the last one I'll show you is financials. You know, as I'm going through some of the individual charts on the sector basis, it's not as impressive, especially when we look at the relative strength, still kind of muted. But if you look, some of the charts that we're going to highlight in a few minutes actually are kind of constructive. And I see this now approaching resistance at the 200-day moving average at the next Fibonacci resistance line. So it might be interesting to see, especially like things like regional banks, like a Huntington Bank shares, if it's able to eclipse those previous swing highs and continue on to new upside. I know financials is a group that many have sort of mentally written off. I want to take a quick commercial break, give us as much time as we can for shifting stocks. We'll see you back here in a minute. Hello, everyone. Welcome back to the show. This is Dave Keller here at StockCharts.com. We love to hear from you and love to answer your questions on the air. We have a mailbag segment coming up tomorrow on Tuesday's show, so get us any questions that you have. Love to think about what you're running into as you analyze these markets and answer your questions. So 2 ways to get a question to us. Number one, email us at thefinalbar@stockcharts.com, or on Twitter, just tag us anytime at finalbarsctv. We would love to hear from you and address your question tomorrow. Let's get to our final segment today, which is shifting stocks. So again, as part of my process, it's three-pronged. It's top-down macro, it's sector rotation. We've hit each of those, and now it's shifting stocks, looking at individual names. I would encourage you, as you think about your own process, regardless of what you actually do, if you trade the E-minis and that's it, I would encourage you to do all three of these pieces, though. Look at sectors and look at themes there. Look at individual stocks, because it will inform your ability to analyze and to trade the broad markets better and more effectively, because a lot of times patterns and rotations especially tend to emerge on some of the individual names before you'd see them on the broad index charts. I'm going to get through as many of these as I can. Starting in communication services, so two things come to mind. The two main baskets I see in communication services are a group of stocks that have pulled back to some sort of buyable level. So this is Comcast breaking above the 200-day final, and then pulling back, breaking back above it, breaking to new swing highs, and then pulling back, and it's right at that 42 level. It's found support a couple times. So now you have a pretty clear stop if you would assume a buy from here, and you'd be expecting a return to the previous highs. It gives you a pretty clear line in the sand at which that uptrend that we're in would kind of potentially be negated. But there are a lot of stocks that look not exactly like this, but similar. Disney has just broken above its 200-day moving average, pulling back today. But again, on a pullback, I think you have clear support not far below. And I can't look at all of these, but if you look around, Dish sort of just popped off its 200-day moving average. Akamai Technologies pulling back to an ascending 50-day moving average. Same thing for like Activision, Blizzard, Electronic Arts, ATVI, and EA. So there are a bunch of charts within there in that first bucket, which are sort of the nice uptrends pulling back to potentially, arguably more of a buyable level. And if these support levels break, I think that's where you have to start to be a little more conservative. We're not there yet. And then the other basket are things that have just kind of done really well. And I think Verizon's maybe a good example of that. It's just breaking out of a pretty good base. So even while some things feel extended, arguably the S&P overbought or nearing overbought and nearing a previous high, something like Verizon has spent a lot of time sort of chopping around in this range, and all of a sudden it's threatening to break out of the 50s, retesting those all-time highs around the 60 handle. So important to maybe watch some of those. In News Corp, T-Mobile, all sort of in that long and strong up and to the right bucket. Within consumer discretionary, I think it's interesting to note a lot of stocks that are just breaking above resistance as well. Gap maybe is a good example of that. You know, in retail stocks, we tend to, I think I'm just based on COVID and just all the challenges we're facing and social distancing, it's hard to imagine a chart like Gap looking anywhere decent, but it actually does. The retail index has actually done pretty well. Retail ETFs have actually done pretty well. Coming out of a low in April, look at how much it's outperformed. It's 30-odd% relative basis just in the last 3 months. And this is now broken above its 200-day, broken above resistance, and not overbought yet. So it might actually be interesting thinking about some of those with potential for further upside. And other charts that are in that bucket, L Brands has already now broken to new highs. Target, for example, breaking to new swing highs after a nice little base here, May to July, now breaking swing highs. We can't look at all these, but Whirlpool, WHR, Nike, and then the home builders. So you have like DHI, Lennar, Pulte, you know, all these charts setting up very nicely. So within consumer discretionary, it strikes me as a sector of things that have broken out. Now, they're not all beautiful, perfect charts like that. Beautiful uptrends. I think a couple maybe more actionable. Newell Brands, NWL is an interesting one because it had a nice run, pulled back after breaking out above the 200-day, pulled back again, this big bearish engulfing pattern that now has resolved to the upside. It's testing those previous highs. So this feels like a base that's sort of, you know, setting up and a break a little bit further above here. If we get above 18, which would be a new closing high there, I think it could be a really compelling chart. eBay is another one that's sort of in that traditional long-term uptrend, pulling back to an ascending 50-day moving average right at support. This either holds here and it's the next leg higher, and an RSI around 40, or it breaks, at which point I think you have to be concerned about further downside, but it's right at that actionable point. I'm going to tear quickly through as many of these as I can, so forgive me for going quickly, but within consumer staples, you know, a lot that are not super impressive, but two, maybe to highlight, Smucker's strikes me as sort of a rounding bottom. This is an unusual chart. I like charts that look different than the average one. This is a stock that has this beautiful stepwise downtrend from April into the low in late June. And then look at this beautiful pattern of higher highs and higher lows. We just bounced off 110 and it's continuing to go higher. So this is a clear rotation from distribution to accumulation on a relative basis, still relatively sideways because it's sort of kept pace with the market in the month of July and August, but setting up very well. And if there is some sort of pullback, you could see something like Smucker's actually holding up there okay. EL, Estee Lauder in the same group, another one that had a nice breakout above the 200-day, and then look at this basing pattern as it found support right at or below the 200-day a number of times now, just testing a new swing high. And I think that would suggest a lot further upside if we're able to break above there. Energy remains a pretty painful sector, I think, from a technical perspective. There are pockets of interest. You know, COG, if you had to give, you know, tell me one energy name that looks decent, I'd probably say COG. And if you look at relative to energy, it actually on a relative basis is incredible to the upside. You know, it may not look as dramatic here because we're doing it relative to the S&P, but you know, worth noting, still also outperforming the S&P over the last couple weeks as well. I did want to hit healthcare just very quickly, and my point with thinking about healthcare is just some concern within biotechs. This is AbbVie breaking below its ascending 50-day moving average. So you like to see it hold that kind of thing in an uptrend. That's sort of the buyable rally. Alexion, ALXN, is now breaking below its 200-day moving average. Where else are we going to go? GILD, I mentioned this a little earlier. This may be one of the uglier ones, really breaking below support, breaking below the 200-day moving average. That's really rotated into direction of negativity. And then INCY is another one. So you have a number of charts within biotech that are all sort of rotating lower. And this is a group that had been one of the better groups, really starting to emerge right around here in late June, early July. Felt like it was really building up for further upside, but they've all rotated to the downside. You know, things that I think are interesting to watch here that I hadn't mentioned, you know, Regeneron is maybe one of them, you know, on a relative basis, starting to rotate lower, on an absolute basis, testing a swing low, and I think a break below 600, which we're right there. All of a sudden, this looks like a beautiful, consistent uptrend to the beginning of arguably a beautiful, consistent downtrend. So I think we're right at that point that I would be watching this and be, if this is something you're thinking on the long side, I'd be identifying a line in the sand where you'd agree to review that one. To finish off, I want to dig into financials a bit because, it's a sector I've not really been a fan of, but you're starting to see some charts that are looking a little more attractive. Ben, which is Franklin Resources, this is a stock I highlighted on, I think the last episode of The Pitch, if I remember right, or maybe a month or two ago. But you can see it's now rotated back above its 200-day moving average. It failed the last time it tried this in early June, so it'll be interesting to see if that's able to hold. Regional banks were actually surprising to me this weekend. And again, they're not in consistent uptrends like you see in other places, but look at the short-term rotation from a downtrend into early July on Huntington Bank shares, now in more of an uptrend, threatening to break above $10 a share again. This is bouncing off of support around 9, so I think you can look at that as support on any pullback, but all of a sudden just not looking horrible, sort of looking sideways to positive. So it might be interesting to watch some of those. In terms of area of concern, I think MKTX, this is market access. This is one to maybe keep an eye on. This is a chart that had been one of the better charts. Look at the relative performance. It just really accelerated going into this May-June period. And since then, it started to taper off. Looks a little bit like the chart of Regeneron almost, but making a new swing low. And now it's testing support, which is pretty key. This is from back here. This is the lows from June. I think if it's able to hold this, it's actually okay. But we're right at that point. I think a little further down this week. It was down 5% today. All of a sudden, that starts to look like something you'd want to potentially think of leaning away from. Within that same sort of general theme, I think it's worth paying attention to MSCI, S&P Global. These are pulling back to ascending 50-day moving averages, like some of the charts we talked about in, I forget where that was, maybe consumer discretionary. Finally, just worth noting in some of the insurance names are actually rotating above resistance. We'll finish with CINF. This is a stock that's been building sort of this base. It's retesting resistance from April, right about at that 200 days. So we have this sort of cup and handle like pattern. If we break above the 200-day, break above that resistance level from the end of last month, all of a sudden it's setting up like a pretty good potential upside chart. That's our shifting stock segment. A lot of movements right here. And again, what's interesting to me is when I'm looking at things like financials, industrials, which we didn't get to, unfortunately, you're seeing some interesting charts there. You're seeing some, either sideways patterns or a little bit more questionable patterns in some of the tech names that have been better, but also especially in healthcare, things like Biotech that had been pretty solid, consistent charts. So I think, rotation doesn't happen in one day. It's a process, and I keep watching some of those signs for breakouts and breakdowns to see if the rotation continues. We need to wrap the show. Go to the 3 and 3 charts. 3 minutes. Here we go. Chart number 1. I rarely like to keep the same chart from show to show, but it's been an interesting one. And on my weekend review, I updated this chart with color coding scheme and reordered these a little bit just to focus on the NYSE common stocks, which is an equal weighted measure of New York Stock Exchange common stocks only, has not broken above the June high yet. But the S&P already has, the mid-cap index already has, small-cap index has not yet. So if you get the all clear with all of these breaking above their June highs, I think that just really signals a broad advance, and that even though you have rotation, there are enough stocks appreciating from here, filling in the gap for some of the high-flying names that have held off a bit. Chart number 2 is the OSX. This is the Oil Services Index, and maybe an index some of you may not have followed. We don't look at it as much on this show, but it did come up as I was looking through some of the industries. Again, energy is just so tough to believe in because on a relative basis, it's been so difficult. But I have to acknowledge this bit of a rotation, and the individual charts are starting to reflect that. You're starting to see some charts that are breaking out of previously set bases, breaking to new swing highs, and if that continues, I think it's worth paying attention to. And then finally, this is the BTK. This is the Biotechnology Index. We looked at the IBB, which is the biotech ETF. We've also looked at some of the individual names here today. Just different ways of looking at the similar theme. While it's still fine, I think on a long-term basis, the trend is still positive at this point. We're threatening to break down through some short-term support levels. The relative strength line is what concerns me the most. This all of a sudden is feeling like a rotation from an accumulation phase from October through May, or even April, a consolidation phase, April, May, June, early July, and all of a sudden you have a distribution phase breaking to new relative lows. I think it's really important on the chart of biotechs, but also on those individual names, especially keep your eye on some key support levels when you want to revisit any long positions or buy ideas. Folks, that's our show for today. Thank you so much for joining us every weekday for the Final Bar. We'll have a mailbag segment tomorrow, so get your questions in as soon as you can. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.